Calcutta Business School, in its endeavor to impart management education, has lined up a few programs. Today I am going to talk about two such upcoming programs of Calcutta Business School. One is Empirical Research in Finance. This is a faculty development program. The second one is Personal Finance, Objective, Time Path and Portfolio Design. That's a management development program. So the first I'll talk about Empirical Research in Finance, which is the faculty development program. This program is during the period 8th to 12th February of 2016. It will be held in Calcutta Business School. It's a faculty development program, hence the participants would be research scholars, teachers, students in finance, and also we are focusing on financial consultants and financial market players. You see, briefly, the financial sector is an area where data is generated continuously on real-time basis. So availability of data for research purposes is not an issue. But one needs to, as a matter of fact, this kind of data qualifies for what is known these days as big data. But in order to analyze this data and arrive at meaningful conclusions, one needs to master certain techniques. The purpose of this faculty development program is teach research scholars, faculty members in finance, students and also financial consultants as to what kind of techniques are available in the literature to analyze this kind of data and which kind of technique is appropriate for which kind of problem. So we'll start off in this faculty development program with introduction to financial markets, players and instruments. Then we'll look into what means by portfolio construction. We'll try to explain basic terms which many of them may know, but still it is important to understand the meaning of the PE multiple, price to book value per share, stock returns, beta, alpha, yield to maturity, duration, convexity, Greeks in options trading, etc. I think it's good that one goes through the basic concepts, understanding of the basic concepts first. Then we are going to spend some time explaining what are the broad areas in finance that has attracted the attention of researchers. We have to understand that researchers in finance and market players in the financial market, their objectives are different. One has to, what we'll try is that try to marry the two and try to see whether we can do research which also helps market practitioners. Now, there are broadly three ways we are going to do it. First, we are going to introduce the participants to econometric methods in finance. It will involve analysis of time series data, discussion of VAR, ARIMA, ARCH class of models, and then there will be hands-on lab environment generated sessions on framing and kind of developing financial models with eViews. It's a specific application of a software. Then we will shift to discriminant analysis, logistic regression and other tools. In particular, our focus will be on application of a software R in decomposition of time series and trying to forecast with the help of R. This we feel is a new area in which we are embarking upon. The third part of the faculty development program will be application of machine tools like multi-criteria decision-making models, artificial neural network, clustering, DENFIS, random forest, etc. It's probably pertinent here to mention that the faculty members who will conduct this program are, besides myself, Professor Joydeep Sen, Professor Indranil Ghosh and Professor Joyita Pitt. Interestingly, all four of us have worked extensively in all the areas that we are going to discuss. So it would be kind of, for the participants, they would get a first-hand idea about what kind of research we conduct in Calcutta Business School. The brochure is available in the website of Calcutta Business School. An interested participant can look up the details, and for any clarification they can contact the phone numbers that are given in the brochure. The second program that I had mentioned in the beginning is titled Personal Finance, Objective, Time Path and Portfolio Design. The flavor of this program is completely different as compared to the previous one. Here the crowd would be basically students, practitioners, professionals who have not really taken a deep interest in the area of finance. So it would be it could be termed as finance for non-finance people. But we like to emphasize that, like any corporate, managing one's finances are very important. As a matter of fact, in line with Peter Drucker, who wrote Managing Oneself, it is important that individuals don't find themselves in a financially disorganized state after they reach their early to mid-40s. To achieve financial freedom, there is a process involved which needs to start early in life and which cannot be compromised upon at any stage. What I am going to do in this program is basically handhold participants in how to determine a financial objective, what kind of instruments, financial instruments to select to form a portfolio, and try to evolve a time path of achieving the objectives that are being stated. So it will start off with the basic allocation problem between consumption and savings. Then it will go for allocation of savings between various financial instruments. Since we have observed that in general people are very financially, not very up to date regarding what kind of instruments are available in the financial sector, what kind of, where to save, what does returns mean, what are the risks involved, what is the timing required. We have found that there is a lack of understanding. This lack of understanding could be for two reasons. One, either they are not interested, and two, they find it too complicated to get involved in. So at times, individuals choose the easy way out, which at times turns out to be not the optimal decision to take. So we are going to talk about stock and flow concepts. We are going to talk about time value of money. We are going to discuss various financial instruments like stocks, bonds, public provident fund, mutual fund, insurance products, gold, commodities, etc. But the important part, what we will do in this course, is try to tell individuals which kind of financial assets should suit their kind of position that they are in. Every instrument is not for everyone. Then we will spend a significant amount of time on mutual funds. What do they mean? What does a thematic mutual fund mean? How to calculate returns from mutual fund? What should be the average holding period? What is a systematic investment plan, etc. We are going to look at money market mutual funds. We are going to look at other money market instruments. We are going to look at gold as an asset and other things. We also will tell the participants that since personal finances are involved, it is important that they look at various sources from which financial data is available. They need to have some idea. And in this program, we again in a lab environment are going to handhold the participants to look at what kind of data is available in the market. We'll then do a fundamental analysis of companies. We'll do technical analysis of companies very briefly, and the program will end with a portfolio design for each and every participant. The purpose is start off with the basic concepts, end with an optimal portfolio, and this portfolio would differ from participant to participant. This program would be conducted by myself and also Dr. J. N. Mukhopadhyay, who is the director of J.D. Birla Institute. This is a 3-day program which will run from 10th, 11th and 12th of March. Again, this brochure is also available in our website. If any clarification is required, participants can always call up the phone number that is available. Thank you.